TAQ Capital, technical analysis quickly.
This is not financial advice. I am not a financial advisor. Before taking any action based on the information provided on this channel, it is recommended that you seek the advice of a professional licensed financial advisor.
Let's do this.
Good morning, everyone, and welcome back to the channel. If you're new here, things might look a little different than some of the channels you're used to, but stay with me, and it'll all come together by the end of the video. As we do in true fashion here, we're going to dive right into the charts so we can handle this quickly. This is in the purple wedge, is the wedge that started back on June 18th. So we've got the first hit back here. If you look here, we got a second hit, a third hit, a fourth hit, and now we're working on our breakout, because as you know, it's 1, 2, 3, 4 breakout. If we zoom in, this is the 4-hour chart, and you can see that we have the 1, 2, 3, 4 starting in this yellow wedge. So here's 1, here's 2, here's 3, here's 4. So to me, it looks like we're working on either a break up or a breakdown. The reason why I say either is because this is a sideways broadening. This line goes up and this line goes down. So there's no definitive answer that, whereas like a downward channel will always break up and an upward channel will always break down. Okay? We don't have either of those going on here. We got a sideways broadening one, which is like this and like this. So then it bounces in between here, and then it either breaks up or breaks down. Generally, the way that the pattern comes in, let me clear the screen off. The way that the pattern comes in and then bounces is the way that it'll break out. So it came down and in, so it'll go down and out. But let's see if we can look around in more places to see if there's anything more definitive than this. Okay, this is my grid chart. It's full of Fibonacci lines and Fibonacci circles that show resistance and support, and it dates back for months, if not years. So if I zoom way out, for instance, to give you an idea, this is the 4-week chart, and my circles date back to July of 2020. And then my channels are approximately the same, July of 2020. And you know, I've been doing this for a couple of years now, and I just decided to start filming these and sending these out on YouTube because I know they can help people. Because when I got in the game and I was listening to all these hype YouTubers like, oh, we're going to 100,000 and all this stuff, I didn't know what I was doing looking at the charts, and I spent countless hours digging through these charts and learning how to use all these indicators and so on. So that's what I'm here to share with you. But enough of that. Let me jump back in. Okay, this is the same 4-hour chart as the one I showed you that was a lot clearer back here. So we're looking at this yellow wedge. We're just doing it with all the Fibonacci lines in here. And I'm going to zoom in more and break this down further for you. But wedges form all the time in different lengths and widths and so on. And you can follow each individual subtle movement. And I'm going to show you that here by jumping down to the 15-minute chart. Okay, that 4-hour yellow wedge is right here. This is on the 15-minute chart. But I want to zoom back to where the meltdown began. And this was our peak right here. Okay? So when we hit here, we changed direction. We came down here. That's our second hit. We bounced over, third hit. We came down again, and this was our fourth hit. Now, then we started to enter this. And that's the part I want to focus on. Although those 4 hits, if it wasn't clear, are within this yellow dotted line downward broadening wedge. Okay, so we got the 1, 2, 3, 4, and now we're working our way out to come out this side of that yellow wedge. But that doesn't mean we go straight across. We could come down like this and then exit the yellow wedge over here. So now we've got to zoom in on all this mess to see what it's telling us. In yesterday's video, I discussed this a little bit and how we went up this orange and then across this purple and then down this blue and then up this red and then down this orange and up this red and then down this white and up this orange and down this blue and up this white, and now we're in this yellow. So you can see it forming because you've got the 1, 2, 3, 4 break, 1, 2, 3, 4 break, 1, 2, 3, 4 break, and so on. But I mean, as of yesterday, I don't think anything past this white line here existed. All this stuff didn't yet. But it's the same concept. But now I'm seeing that we're actually forming a new wedge. This blue wedge here, the dotted lines are my wedges. The solid lines, like this one down here, are my Fibonacci lines. So we've got a hit here, a hit down here, another hit up here. Wait, no, that's not correct. Where's the hit? That looks like I might be zoomed out too far. One second. Yes, I was. So it's hit here, hit here, hit here. And now we should be working on coming down here to make another contact with the blue line. Now, this wedge again is just forming, and there's a whole bunch of wedges in between it. So then if we want to confirm our suspicions with this wedge, because I mean, in 2 years, the wedges don't lie. Whether you like them or not, they don't lie. Whether the Ichimoku cloud or something is disagreeing with it, they still don't lie. So the cloud, you just might be looking at the 1 hour, the 2 hour, the Tenkin and the Kijin, which I'll explain in a moment, don't really hold as much force. But the wedges are there to guide you. So you look at the totality of the circumstances, and that's how you make your best guess on the next move. So if I bring in the Bollinger Bands, which is this white smoky substance, and the Ichimoku cloud, which is the green line called the Tenkin and the red line called the Kijin, and I try to figure out what's going on here. Well, firstly, you can see that we just came up right here where we created the second point on this dotted blue line. We tested this solid blue line, which is a Fibonacci circle, and we were rejected down here. And then we didn't quite make a touch here. We came down, and now we're going back up again. So we may make several attempts along this Fibonacci line, and if we keep getting rejected, that's when we're going to come down. However, the Kijin and the Tenkin are phenomenal. I don't know how anybody does this without them. However, when you get below the 4 hour, they become less reliable. Obviously, the 2 hour is more reliable than the 15 minute. So we're just going to jump up to, say, the 30 minute and see what it's saying. On the 30 minute, we've got the Kijin holding strong down here and this giant space right here. So the Kijin is calling these candles back down to it. So this is looking like it's going to come down to this area and possibly below. This could be how we end up challenging the yellow here, which is the wedge we've been in since June 18th. That's why I made it bigger dots. Then if we jump up to the 1 hour, we've got the Kijin and the Tenkin holding strong down here. So both of these are coming down and calling these candles down. Jump up even further here. We've got the 2 hour. This isn't wholly revealing. I mean, this is a decent size between these two, but nothing dramatic. But by looking at the 1 hour and the 30 minute, you can see that it's going to be calling it down. If we jump up to the 3 hour, again, nothing too dramatic. 4 hour. Got the 4 hour, we've got the Kijin. Let me zoom out here a bit. We've got the Kijin coming down to meet the Tenkin. And if you see the Bollinger Bands forming here, they're getting thin and creating this tunnel. So as you know, these were kind of moving around here in this fat smoke where you have all this room above it and all this room below it. Now we're getting into the tunnel. And as the tunnel forms here, it starts to build pressure. So we might have, for instance, this dotted blue line that I said it was starting to form here, this wedge. This is a downward wedge, which means we've got our first hit, we've got our second hit, we've got our third hit, and then we're going to come down and test the fourth hit, which could be something like here, and then we're going to break up. This break down would come outside the Bollinger Bands. You can see that, which would give it the thrust to go up and possibly considerably outside the Bollinger Band. That might be the breakout from this yellow line that we've been in since the beginning of the meltdown. So then if we get the breakout here, this could come up, get rejected on the Fibonacci line, and then come crashing back down. So then we complete this yellow wedge, and we would complete this yellow wedge when we break out over here. And the Fibonacci circle here would have to be something that it blows through. And if it comes a long way outside the Bollinger Bands, let me clear this up a bit. This is the Bollinger Band. if on its way down it comes a long way outside the Bollinger Band, that, if you think of the Bollinger Bands like elastic, you know, the more you push on the elastic, the more springy it is, and then it's going to throw it up. And if it throws it up, it'll have enough momentum to break through this Fibonacci line. But it'll be losing momentum by the time it gets here. And even if it blows through this one, it's going to hit that one as well. So by the time it's going through these barriers, like over these speed bumps, it's going to run out of momentum. And that's when you're going to see it come back down. So that would be a very feasible way for this to play out. Now, that's obviously no guarantee. But if you are in a short right now and you could see it come down here, anywhere in this area is where we could have this second hit on this blue line. So for instance, if it comes down and overshoots the blue line, because this is just drawn in as a 1, 2, sorry, let me back up here. 1, 2, 3, and this, I just know that this blue line has to be below this area. So we've got 1, 2, 3, and now we have to break past the tip of this candle. So otherwise this would be our third hit, and that can't be, because we have to zigzag. So if it comes down here, then you just grab this line here and move it down. And if you move it down, we have, well, even if you don't move it down, we have a downward channel. So 1, 2, 3, 4, and then we're going to break up and out of this blue, which will take us to the yellow and out of this yellow. So we can see that forming. So if you're in a short, you start getting down in this area, think about taking profits, because then it's going to go up, and a lot of people are going to freak out, because as it shoots up here, even though this isn't a massive percentage, you're using leverage, you can start to freak out about, if you're over leveraged, you're taking a 10x, 12x, 20x, if you're in the futures at 100x, you come up too far and you're going to get liquidated. So my suggestion would be, let me just pull up a price here, 20,600-ish, 20,700-ish, you're going to want to take profits and then let it ride up. Now, it's always possible too that this comes down even further. It might even come down to the 20,141 range, because you could bring this blue line down here, have this blue line extend further out, and then you're talking 1, 2, 3, 4, and the support from this Fibonacci line is what throws it back up. But my issue there is if you switch to the 4-hour and you look at where that 20,141 is, it's going to be so far outside the Bollinger Bands. Is it possible? Sure, it's possible. You could get a wick down there, but you'd be going from here all the way down to here, and the Bollinger Bands are in this area. So you'd be way outside the wick. And it's not likely, but it's certainly possible, especially if everybody's panicking and so on and so forth. But that giant wick down to here would absolutely thrust it up there. I have no doubt about that. But this could be the volatile move that this tunnel means, because the tunnel builds pressure. That's when you have big moves happen. So as the pressure builds in here, it could shoot way down here, and that's the big move. But then it'll overcorrect up to here, or even the double Fibonacci circle. So just be mindful if you're in a short. This is the place you want to watch. And then I think once we settle, once we have this breakout of this yellow line here, and we settle somewhere up in here-ish, and that's when we're going to get our, a little consolidation. Maybe it'll run down this Fibonacci line before we get our next big breakdown, which is going to blow through this yellow line, because this is our, first challenge at this line, and then it's going to go up a little bit, and then it'll be a re-challenge, and that's when we're going to break out. So, somewhere out in here, early September could be our big breakdown. But anyway, if something else happens, I'm going to jump back in here. That's it for me today, guys. Like, share, subscribe. Check out my socials in the description below, and I'll see you guys in the next video.